Hello, this is Robert. I'm a tax attorney, and we're going to be discussing IRS debt forgiveness. And this is basically paying less than you actually owe to the IRS. And there's three most common types. One is offer in compromise, which is basically your standard settlement. Second is a penalty abatement. And the most common type for that penalty abatement is a first-time penalty abatement based on prior compliance. And third is the tax debt expiring, which really isn't forgiveness, but we kind of throw it in the same category because it's similar, even though it's technically more of just a legal result that happens. So first, let's go over offer in compromise. And basically, that is your standard tax settlement. And you're going to hear all these ads about pennies on the dollar tax relief, getting 90% off. These don't really matter. What matters is the formula, which is taking your income, taking your assets, putting through this formula, and seeing what you can pay at the end of the day. People that are barely making it month to month, that really don't have any assets, they got a pretty good chance at an offer in compromise. People that owe a ton of money, sometimes they can even be making more money and, have a fairly decent salary and still get an offer in compromise. People that are only collecting Social Security, don't got any assets, most of those people, almost all of them probably will get an offer in compromise. But the pennies on the dollar and the 90% off are just terms that you'll see used on ads. And when you get this type of settlement, it's really good because you're settling for often a really, really small amount. We've had tax debts where the person owed $250,000 and they paid $100. Now, that's not always going to happen, but if your numbers zero out, you don't really got anything at the end of the month, you got a good shot. Another common form of tax forgiveness is the first-time penalty abatement. And it's based on your prior compliance. So basically, they look at a tax year, they look at the 3 prior years, and see if you had any penalties assessed before. And if you did not, by making the request over the phone, or sometimes you got to write it in, if they say they can't authorize it over the phone, you get the penalties taken off, and it will get applied to other tax debts or applied as a refund. And the reason this thing is so popular is because it's just so easy. And here's an example. You owe 2017, 2018, and 2019. Okay, you've paid off the base tax and interest on 2017, and you want to get the first-time penalty abatement. They're going to look at 16, 15, and 14. If there are no penalties with your request, they abate the penalties. Sometimes they'll make you write in a letter, but a lot of time they'll even take that over the phone. Now, something worth mentioning about penalty abatements is the other ones that are not a first-time penalty abatement need to be based on reasonable cause. So there's a real reason for it. And those are really hard to get through. So you'll hear a lot of people trying to oversell the penalty abatement. It's really a hard thing to get, so be very cautious if that's the only thing that they're saying is going to save you money. The first-time penalty abatement, most people are going to get. But the other years, most people are probably not going to get. So if your case was just a simple payment plan and you just have a first-time penalty abatement, just check out our guide. If you hire somebody and it's just based on them doing a penalty abatement for you, your reasons better be pretty good because the odds are just not in favor for most people submitting a reasonable cause penalty abatement. But still, there's ones that get through, and if you think you got a good shot, do it. And might even be something where you think you got an okay shot, but it's not worth paying someone to do it. Try it yourself, send it in, see what you can get. Okay, so now let's talk about a third common type of tax debt forgiveness that's not really forgiveness, more just a legal technicality, which is the IRS has about 10 years to collect on most tax debts. Now, a bankruptcy being filed or an offer in compromise and some other things being filed can extend that time period, but a lot of tax debts are going to expire 10 years from the date they were assessed or somewhere close to that. Also, if you do a payment plan or non-collectible status while that request is pending, that'll add some time too. So a lot of people aren't going to be exactly at 10 years. Most people that dealt with the IRS at some capacity had a payment plan or some request in, and that might have tweaked the time a little bit. But your tax debt does eventually expire, and you get a lot of cases where for some reason they don't qualify for an offer in compromise. Maybe they got a ton of equity in a home, but they can't really leave the home, and for whatever reason the IRS won't accept the offer in compromise. So instead, you can get a currently not collectible status, which is like a $0 payment plan, or if they had a little bit of gap between income and expenses, a partial pay installment agreement. So you might have someone that pays $100 a month on a $100,000 debt and they got 5 years to go. Well, they're not going to pay off the debt, but they are going to get a tax debt forgiveness kind of by the debt expiring once the time period, which is called the collection statute expiration date, has hit. And you can check out our link below for more information on collection statute expiration dates and how they work. If you would like an expert tax attorney to take over your case for you and handle it, schedule a consultation with one of our expert tax attorneys. Go to trp.tax/start. We'll also have the link below, or you can call us at 888-515-4829. That's 888-515-4829. If you're going on your case alone, check out our free tax help guide at trp.tax/taxhelp and also link below. Thanks for watching and have a great week.